Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday, just before the jobs report market webcast. All right, we got non-farm payrolls at 8:30. It's about 8:05 as I'm doing this right now. You can still see the Bollinger Bands here in the daily chart continue to be tight. The bulls have held the mid band for the last 3 sessions. They made a higher high, and they're trying to break it back up to and over the top of that 42.11 area. Here on the daily chart, you can see where it all started to go wrong. It all started going wrong on Tuesday when they went down to monthly pivot and they didn't have an answer. So they bounced it there. Then you had just a continuation of rejected attempts at lows. Here, here, here. And finally yesterday, they had enough. So they took it down yesterday, which was a nice short for us. They took it right back up to the 9-day, and they held the 9-day nicely. That's this blue line right here. So the 9-day simple moving average for a couple of hours. Problem is they bring it back in to the daily mid. They hold that. They turn that into a higher low. And then what happens? Well, they get launch padded. They go through the 9 like it's not even there. They go through the pre-FOMC price like it wasn't even there. They go through the weekly pivot like it wasn't even there. And you find yourself closing above 41.90. They come back and they confirm that area a couple of times. You put in 91.75 off the Europe Open, and you go and make a higher high. So the only thing left to do for the bulls is make an all-time high and try and extend. You have a hell of a catalyst coming up in about 25 minutes. We'll see what happens. They could go either way. So we were short yesterday. We ended up long 63 off this move back into the daily mid band. It wasn't an easy move to catch. It was pretty choppy in there, but we caught it and we did 20. We took 2/3 off for 20 and then 40 because it was a move that we talked about. There was so much in that inflection point at the time that what we wanted to do was just go even stop and let the thing work. And if it stopped us out, it stopped us out. We had already made our day at that point, and we did that because once that area decided, and I say that area, I'm talking about 57 to like 64. Once that area decided what it wanted to do, there was going to be a violent move, either up or down, in that direction. We had tried on the short side a little bit. They didn't look good down here. They did not look good when they bounced it up off that 41 area. And there's only so many bites that the bears are going to get at that apple before the bulls are just like, well, I guess back to normal. They can't do anything about it. So, where's the all-time high? And off you go. That's just the reality of this tape right now. So what do we have going in the jobs? Volume-weighted average price, 41.99. Proprietary moving average is 02 and change. 5-minute mid, 04. Daily mid-band, 94 and change. So any upside reaction to jobs, in my estimation, has got to bust through 42.11 and really leave no doubt. If they do that, then they can run it up towards, you've got 41.24 up there. I'll have the Briefing report out before the open. Look at that support resistance table. What levels am I looking at on the upside? I only give it to you every day. If it's out there for free every day, and those numbers hit every day. Want to learn how to trade them? Come in and we'll teach you how to trade them. On the downside, the whole conversation, there really is no conversation for the bears anywhere above. You got to say anywhere above the 41.77. I can make the argument that until they break 41.60, there's really nothing to talk about as far as the bears are concerned. They need to, they really need to close the day below the daily midband in order to, demonstrate that they're just not, there for a trade and another higher low heading into Sunday, Monday. And the jobs report is a catalyst for something like that. If they don't like the report, this thing could take the elevator shaft down pretty quick. Don't assume anything. Don't game jobs. That's a recipe for disaster. All right. Have a fantastic day. Have a fantastic weekend. Be safe. Be healthy. Take care. Trade them well. Come check out the room, and I'll talk to you guys on Monday. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.